What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Guys, bringing you the best platform, and today is your midweek sit rep. Guys, you can check out everything Traders War Room has to offer right there at traderswarroom.com. But for right now, I need you to hit that like, share, and subscribe button, and I need all of you guys to come along with me on the journey and check the description tab out. Tons of tools and tidbits right there at your fingertips so that you can become a better and more profitable trader. Now, if that sounds good and you're ready to rock it with me, then all I got to say to you is follow me and let's go to war together. Traders War Room, let's get it right now. All right, team, before we go ahead and get started, you guys absolutely know that TWR set you up for success. So we're going to do check on recent alerts. Guys, we absolutely destroyed the market today, and you guys were all ready for the downward trend based off of the federal minutes. And we're going to look at some of the alerts, and these aren't all of them. I couldn't put them all on here, because they would take up the entire video. But guys, let's check some of these. Absolutely killed it. Look at this Apple trade. And guys, we give you the in. And not just that, we're also providing you guys guidance, okay? You don't just get a one-stop shop here. When TWR sends out stuff, we're giving you guidance along the way, average downs, information, and all these trades are the way I'm trading. And guys, look at how we closed today. Definitely, absolutely able to capitalize on this tomorrow at the market bell, and we can count this one as a winner. Look at this one, AMD. We took this one, went ahead and got an AMD puts. It started downward trending. We caught it at the top, and we went ahead, scaled out, and we got more to run out at tomorrow at that market bell, guys. A swing trade that's going to be another banger. Right here, Amazon. We've been riding Amazon for a minute. Look at that time and date stamp. On the 19th, we alerted Amazon 121 put, 23 September at 163. I gave you guidance today when I got hit up with a whole bunch of DMs because people were like, oh my God, we're running. I said, stay calm, just let it happen. And I promise you, consistency and discipline will pay the bills. And look at that, man. Boom, 292. And we still got a couple runners with that stop loss protocol. BYND, guys. This was a no-brainer, man. BYND was going to fail on any type of negative news anyways. That COO got arrested, plus the market dumping. BYND was a banger. Easy peasy. 112 entry, 155. Stop loss protocol in effect. Google. Now, this one was a little tricky. We had to average down. Google started trending pretty hard, okay? So we went from 170. We had to trim down a little bit to 185 with the average down. But, guys, we absolutely destroyed Google, and we've been trimming and eating. And, guys, when you look at where Google's at right now, I promise you it's way above that 209 area, and that was just the last update. So we're going to go look to exit out of that one for cash on hand tomorrow. That's another swing trade in the bank. And look at this Nike. Guys, I got a lot of hate on this because people were like, man, Nike's booming. It's one of the only Dow stocks to actually be green and all this stuff the other day. And I told you guys, they just got downgraded. Nike is going to continue the downward trend. And look at that today, 190 entry. We were able to trim out a 267 with stop loss protocol in effect. Another winner right there. And team, these are just me, okay? I got 25 other people on my server doing the exact same thing that I do. Now, talking about the servers, let's take a look real quick at my server. Guys, truly something for everyone, whether you want live trading or you want futures or you even want sports betting. And then we got all these data quants. We got the algorithms going off. We got trigger watch lists, in-depth watch lists. And then this is the real money maker right here, all the alerts, whether you want day alerts, swing alerts, options, stocks, we got crypto, we got leaps, we got spreads, we got forex, we got truly something for everyone. And we got all the greatest influence signals out there, charts, earnings news, all sorts of stuff. And plus the research and learning center, guys. Truly, when I tell you we got something for everyone, every style and every budget, I mean that stuff, guys. All you got to do is, if you want consistency like this and truly something for everyone, you just got to join TWR and trade with the bulls, guys. Go right there. You can read about what we're about, where we come from. Click one of the links, either instant message or the Discord, and you can get hooked up with that. Now, let's go ahead and get into the video. So what's hot and what's not? Here's how your markets close, and you guys could see it, man. Everyone felt it, okay? It started to run. People were like, oh, man, we're averaging out on the mean from the dip, and then boom, it just tanked, guys. And I told you guys this from the get-go. This was going to be a very bearish, very hawkish type of meeting, and it was coined on CNBC as being hawkish for even the hawks out there. So it was definitely, we got some more downside coming. Here's a market picture image. The only thing green are those inverse ETFs, guys. And here's your futures right across the board. They're already sliding. We're going to look for some more downward pressure coming in the near future. Here's your sector performance. I don't see a green thing on there. Consumer staples was the least lagging performer out there, with communication services being the highest one. Here's your dark pools. Some money flowing into SPY, Q, but we're not seeing the volume with the big money buys like we normally see with the block trade. So definitely the investment sentiment is not there with the big money. And here's your calls versus your puts. Definitely heavy on the put side, guys. Everyone's bearish right now. So we definitely are going to probably most likely see a opening lower tomorrow, and we'll have some nice little downward pressure. So our puts are going to pay big. Here's some stock winners, top gainers. You know, there were some winners out there. You're seeing a lot of activity in the penny stocks. A lot of people are going to the penny stocks, especially now that some of the big cap and large cap are, you know, kind of fluctuating a little bit. So people are going to the penny stocks, which is normal rotation. So definitely they're fun. They move violently. And when you catch them and they're so cheap, you can catch nice runs that are 25, 50 cents on the underlying asset, and you can make some decent money. So definitely paying attention to that. Here's your top losers. CBIO, Pixie, a lot of the same ones, guys. Okay, so definitely a lot of volume out there trading. A lot of these penny stocks are definitely moving and shaking on high volume, so we got to pay attention to them. Most volatile stocks, you got Milai, HKD. HKD is interesting. That's a Chinese stock, so that's definitely something to pay attention to, okay? Because, you know, sometimes these Chinese stocks get pumped and we're able to catch them on some runners, but I do not like to hold Chinese stocks very long. They're just too volatile. They're too unstable. And to be honest with you, I just don't trust them. So definitely, but we like volatility because volatility is what gives us those dramatic moves. And here's your most active. Of course, you got the TQs, the SQs. SQs are getting a lot more steam right now because they're relatively inexpensive. And this is, you know, like a bearish ETF. So example, it's an inverse ETF. So if you were to go with calls, you're betting that the market's going to drop. And if you were to go with puts, you're betting that the market's going to go up. So it's a little bit different strategy, but it's definitely popular. And also the XOXL, you know, that's going to be the semiconductors ETF. That is very popular right now. Of course, Apple and SPY, Ford is getting some popularity in there, the Qs, AMD. So definitely some of the normal tickers are being very active, and we can catch some of the jumps and dumps with this volatility. Most active ETFs, of course, we just went over that kind of the TQ, the SQ, the SOXL, the SPY, and a lot of these are definitely pay attention to this LABU, okay, LABU. That one's interesting. I like that one for more of a downside. It's a bull 3 times ETF, but I do like this for downside. I don't think people are going to be dumping much money into biotech, especially when we're not, when stuff's being penny pinched with research and development. Unusual activity, of course, we like unusual activity because unusual activity is out of the norm, and this is what gives us dramatic pushes in both stocks and options. And so we like unusual activities because we can usually get that dramatic push either to the upside or downside that we can ride. Golden crosses. This, I put it in here because this is the normal for the midweek sit rep, but right now, the golden crosses, we're not really looking too bullish right now. I want to see more continuation with above a lot more of the major large cap, stocks. I want to see more move above the moving averages before I start thinking about going long on positions. Death crosses definitely on my mind because the death cross continue to the downside based off the moving averages. So we'll be paying attention to these pretty good and seeing what type of pressure we can ride. And here's your 52-week highs. You're not seeing too many of the normal names at 52 weeks highs, but you're definitely going to see some at 52-week lows. Okay, we got a lot of the big boys. Okay, Microsoft, Google, Open is interesting, man. Open was one of those SPAC deals by that Chamath guy, and it's just been getting absolutely just hammered. Okay, we got XPIV, we got the other Goog, MU. So definitely paying attention to some of these 52-week lows. We could see a little bit of resurgence, a little rejection from the bottom, but don't get caught with that dead cat bounce. All right, so let's get into the news. Fed delivers another big rate hike. Powell vows to keep at it. So this is what got people really bearish. Okay, they were expecting a little less hawkish news, a little more dovish, and that way they could feel a little bit better about longevity investing. However, he was very hawkish even for the hawks, and the Federal Reserve Chair Jerome Powell vowed on Wednesday that he and his fellow policymakers would keep at it their battle to beat down inflation as the U.S. central bank hiked interest rates by 0.75 percentage point for a third straight time and signaled that borrowing costs would keep rising this year. So this was big news. All right. Basically, what he's saying is like, hey, inflation is not under control. We figured it would be lower than it is currently, and we have to continue the rate hikes at an even more aggressive pace. I would not be surprised if the next rate hike is up to a full point, if not a point and a quarter. Okay, so we're definitely paying attention to that. Next news, U.S. FTC rejects Amazon's bid to quash Bezos' jazzy testimony. So the U.S. Federal Trade Commission on Wednesday rejected a bid by Amazon Incorporated to quash demands that both Chief Executive Andy Jassy and Executive Chairman Jeff Bezos testify at investigating hearings. So given the tone in the overall marketplace and this negative sentiment story, we can expect Amazon to probably go lower on this one. So definitely paying attention to some puts, going out a couple of weeks, give yourself some time, to definitely wade through some volatility. But I do believe Amazon continues to the downward trajectory. Big U.S. banks prime rate soars to highest since financial crisis. So 3 major U.S. banks said on Wednesday that they will hike their prime lending rates by 75 basis points, bringing the rates to their highest since the global financial crisis of 2008. Some of you are probably too young to really remember that, but guys, this was huge news. Okay, this was the big old one with the housing market and stuff like that, the Fannie Mac stuff. Okay, so we're definitely paying attention to this, and this is big news. All right, so JPM, Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley, we're all paying attention to these, okay? And these could definitely be some decent opportunities to get into some of these and trade to the downside while the momentum's hot. And finally, U.S. dollar soars to 2-decade high as Fed flags more large rate hikes. So the dollar surged to a fresh 2-decade high on Wednesday after the Federal Reserve raised interest rates by another 75 basis points and signaled more large increases at its upcoming meetings. Now, this is something I'm going to talk about in my tech video on Saturday. However, I need you to start taking your mind out of trading into equities and to derivatives, and I need you to start looking in and Googling and start researching up, getting into I-bonds and bonds and CDs and fixed income. Basically, that's what we're talking about. Okay, getting into some fixed incomes. The rates right now are extremely, appeasing to the appetite. And this could be, probably like a 10-year buying opportunity for some of these, So spending a little bit of money, doing some research on some of these bonds and getting some fixed income into your portfolio, if you're not familiar with that, is definitely a good idea, especially with these current rates. So I'm going to talk about that in the tech video on Saturday, but definitely do your due diligence and Google that stuff, fixed income and bonds and stuff like that. All right, so let's get into some trending stocks and some charts. So right here, you have your top 20 hottest trending stocks. Of course, you got all the big boys up there, the SPY, the Google, the Tesla, the Baba, Apple, Labu, and we got some of these stock charts coming at you as well. Today's going to be more of kind of a big boy stock chart one because they're the ones that are moving and shaking and are causing some of the smaller ones to ride the coattails. So we're going to focus on the big boys today. Starting off with the charts, SPY. I've been telling you guys for a minute, okay? And I even put my money where my mouth is. You guys know, the ones that follow me, I got those 350 puts pushed out to 21 October and 18 November. And I am up significantly currently on those particular puts. And you guys have been rocking me for a while. I've been saying it for a minute. She's going to go down, okay? And we're going to have relief days. Yes, that's going to happen. It's going to be opportunities to ride both bull calls and bear puts. But ultimately, we're going to continue to go down until we start to get more sentiment into the marketplace. I see SPY hitting between 350 and 360 by mid-October. And that's something I put my money where my mouth is, and I believe it to the core. XLB, home builder sector is getting wrecked, guys, and we're just going to go lower. I could see this going towards the 50s. All right, and this is going to rebound slower than other sectors, so definitely keep your eye on this one. As long as we're below the moving averages on these, this is good to ride down on momentum. XLF. So the banks got hit hard today, and I still like the idea of a banks during a recession for a safer type of investment, but we want to hit this bottom first. Okay, so with XLF, what we're looking for is we're looking for continuation to about 31, maybe 30 if we really get a dump. All right, and then we're probably going to see a nice little rejection from there, and then that'll be the time to start going longer into some of your stocks, or at least starting positions in some of your plays for the Bank of Americas, the Wells Fargo, the JPM, so on and so forth. But definitely, I would be playing to the downside on this until we start to see the rejection from the support. Apple. So Apple's a little different story. I do see that we continue to go lower. However, this might show more resilient than some of the other big tech stocks. Okay, this could also offer a chance to really get a great price at Apple on a lower budget. Now, we have seen Apple down there at the 140s and 135s, and that is the place where people start scooping it up. We are approaching demand zone, where we're going to probably see a little bit of rejection. However, I think we got some more downward pressure coming. I wouldn't be surprised if Apple starts to peak below the 150 into the 145 area. And when you look at this progression that it's had since July into August and coming into the beginning of September, it's just an unnatural rise right there. You can look at that chart right there and see that it's an unnatural rise. All right, so we're due for a cool down. We consolidated a little bit here between the 150s to 160 areas, and we're failing that one. So we're going to continue to go down, and we'll probably start to see that rejection in the 140s where people are like, you know what, enough's enough. This is the time to go ahead and start going a little deeper into Apple. Amazon. No good news with Amazon, man. Who'd ever thought you'd be able to pick up Amazon for below like $1,000? You know what I'm saying? We're at 118. We're going to continue to go down. I could see this going all the way down to 100 before we start to see strong support from the bottom. So we're definitely about to break this previous level of demand, and I think that we continue to go down. Now, this is probably another one that we could see a nice little resilient from the lower levels, but ultimately with the negative news and some of the stuff that's going on with the legalities and the questions of Amazon's practice out there, I still think that we continue to go down, and I believe that we can catch this at a decent price below 110 sooner than later. Google, huge dump. And I actually like this one for a bounce. Okay, I think they're going to get a lot of auto traders starting to trigger in here pretty soon. So, below $100, this is buy zone for me on Google. We got a nice broadening out of a range. So we did have a range for a while between 110 and 120. It was ranging pretty decent. You can consider that kind of some big boy consolidation, but now we got the dump and we're broadening out to the downside. So what normally will happen is we'll see a nice sharp rejection at the bottom, a nice push to the upside, and then potentially if we can't hold that or retest that area, then we'll continue down to a little steeper curve. So I do think that we get a nice little rejection down the bottom, and this could move the SPY, which would go into the idea that we will see some of those relief rallies on the way down. Microsoft. So I'm kind of 50-50 on this one. As you can see, the amber text over there. I think we'll see lower levels, but just like Apple, Microsoft is seen as more of a safer play, and it's shown pretty decent resiliency during recessionary times. Nothing is safe during a hard recession. Even I've been hearing the buzzword a Great Depression. So pay attention to the buzzwords that are coming around, because now it's becoming more, of a known common term to hear recession, but you're also starting to hear depression, and you're starting to hear stuff like the Great Depression. So definitely paying attention to this, okay? Because it's pretty bad out there, and it's only going to get worse. So I do like this to go lower, but I do think that down here at this price is a place that people are going to start scooping this up for long term, because Microsoft is just one of those companies that the world is not going away from Microsoft products. It's just not, it's not happening. All right. And with that said, we're going to go ahead and give your next free trade alert. Guys, we are 11 for 11. And let's not mess this up. Okay. Let's make 12 for 12. All right. So we got Disney. I think Disney's going to go down. I think we're going to go down and we're going to test those $100 levels. So what I got is I got a trigger type of a deal here because we want to be safe on both sides. You know, we might get the rally, but we're going to look at Disney for calls above 107.25 and puts below 102.25. And the contract idea that I have out there is 110 contract for the call, 7 October, with $100 contract for the put, 7 October. You could always push out to 21. There was some decent volume, but the price is right. And I think we have a decent amount of time if the triggers are pulled. So this is going to be our next one. So when you see me alert something about this, just know that you got it first on YouTube, and this will be our 12th one. And I hope we got 12 for 12 because we are killing it on these YouTube alerts. And finally, viewers choice alert. Guys, I got asked to do Upstart. I actually, I'm still bearish on it. I think Upstart, not a lot of people are going to put money into it in a bearish type of sentiment economy. However, at this price, and especially when Upstart used to be like 120 and almost a $200 stock, this is definitely, appealing for potential to have a decent little push with some volume. Okay, so I do think this level down here, I think we continue to go down a little bit further. However, people are going to start scooping this up and thinking long term, and then that'll cause some volume to catch underneath the sales, and we could see a nice little push up from there. So definitely keep this on your radar. Important notes, guys. So the housing market will suffer. We found that out today. That what came straight out of the horse's mouth with Powell. Inflation is not turning quick enough, and that was another one from the federal chair. Rate hikes will continue, and the Fed is going to keep an aggressive tone. Recession almost a certainty, and probably a longer than expected. They were expecting maybe if we went in a recession, it would be, 6 months to 9 months. Now they're talking about 12 to 18 months, so they just keep pushing the stuff out. And basically corrections is the term that is starting the market having a correction, the housing market having a correction, financial market having a correction. Corrections are usually 10 to 30%. So that is something, if we start really heading into a correction, that is something that you can, rest assured that it's going to be between 10 and 30%, and probably, depending on the severity of it, closer to that 30% mark. So we got a little bit more if we're a little more, conservative on our outlook of the market. We got a little bit more downward side that we can go from here. All right, team, and that is it. Up next is TWR products and services that we offer. If you're not interested in that, please stop the video right now and check us out on the website, or go to the direct links in the description so you can get spun up with Traders War Room platform and the instant message platform. For the rest of you that want to rock it out, let's go ahead and get it right now. So TWR products and services, truly something for everyone and every type of style. Whether you want some free real-time alerts, you want live trading bell to bell, you want one-on-one mentoring, trading classes, or a fantastic community to trade with, we truly have something for everyone. You can read about what we got to offer at one of these website links, or you can go to traderswarroom.com and get spun up right there. We have all the stuff and all the links that you can get spun up on our platforms and come join the team. One-on-one mentoring, allow TWR to help you become consistent. Guys, I've been booking out actually almost 2 weeks in advance on one-on-one mentoring. We are picking up because people want to learn how to develop the skills. They need to gain that confidence. They want to receive guidance. They want to refine strategies and also get a pro perspective and explore new plans of attack, man. And we can offer you all of that stuff. And guys, every book session gets the recorded copy, so you have a tool and a reference point. And guys, you will not beat TWR's mentoring price out there. I promise you that, for the quality and content, and you get to keep the recording as a tool reference. You're not going to find a better price than what Traders War Room has to offer. So book your session today and let's come learn together. Every battle needs a plan, and we want you to build yours with TWR classes. Whether you're looking for some upcoming live classes that we do via our Zoom platform, or whether you want a historical class that we've done previously and we put it on the website, the choice is yours. But we want you to build your battle so that you can go to war with Traders War Room and be a lethal trader out there. So check out what we have to offer. All the historical classes are on the website. You can purchase your class right there from the website and watch it 24/7, just like any other video platform. All you got to do is go to these websites and you can get checked out. You can also go to traderswarroom.com and just start using the menu buttons right there and just check out what we have to offer. Less noise, just alerts. Guys, I want you to check out Traders War Room instant message alerts, especially if you're feeling overwhelmed with the platform that you're in. Guys, we make it super simple in this instant message alert platform. Guys, 2 channels. You got an alerts channel for the fire alerts that make the people the money, and you got an alerts lounge where you can hang out and chit chat with other members. Definitely, if this is something that you're interested in or you just feel overwhelmed with the platform that you're on currently, come check us out. And this thing has been gaining a lot of steam and it's extremely popular. And finally, we got an options fundamental course. Guys, we have a formal course that's 6 weeks long, 2 classes per week. And our highlight is here is that we truly want you to quit wasting money that doesn't teach you how to make money. And that's what we're doing in this options fundamental course. From the cradle to the grave, you're going to learn everything fundamentals that has to do with options trading. You'll come out of there not just a good trader, but hopefully an elite trader. And guys, we got our next course coming up in mid-October. We're almost wrapping up this current course, and we have some fantastic testimonies from those particular individuals, and they are learning a lot. They're already out there attacking the market and making money. So if you're interested in that, definitely check us out right there, traderswarroom.com, Options University, or you can hit me up directly in the description. I have my email there, and you can get on to me at social media, ask any questions. I'll give you any answers. With that said, I want to thank you for coming along with us on the journey. And guys, truly quit wasting that money that isn't making money and join TWR today. Go to the website, check us out. From Rocket, our official battle buddy mascot, and from all the staff at Traders War Room, we want to say that we thank you for coming along with us on the journey. Thank you for making us your preferred platform, and thank you for trusting us. And remember, we look at the stock market like a war zone. Stocks and sector, those are our battles. We do it together as a team. We're attacking, we're conquering, we're destroying, and we're always going to war. If that is something that you can rock with, then all I got to say to you is follow me. Let's go to war together. Have a great day. Let's go out there and make some money tomorrow.